a clean buy for me with a 119 stop.
Okay, all right, Rahul, thank you very much. Thanks for those ideas. 30 points, I mean, so the market's not staying down, or it's not sort of going after correcting. It's not going deep in the red or anything. It's bounced back. But one thing is clear, there is a little bit of hesitation at high levels. By the way, futures premium is still 100 points. I mean, 101 points. That's something. 17,650 on futures. Dinshaw Irani is with us, Chief Investment Officer at Helios Capital India. Dinshaw, great to have you with us here on the program. Thank you very much. I mean, that futures premium is optimism about the market, right? Very simply put.
Prashant.
Yeah, sorry.
Prashant, anyway, thank you for having me on your show. And obviously it was that way. So basically our call was fairly clear. I mean, we in fact were first ones to take a cash call and probably started investing at the right time again, and sometime in June onwards. But the fact was that this recent run in 2 months of roughly around 17-18%, that needs to be digested. I mean, that is the clear call that we've taken, and we always felt that this run should be digested by way of either a time correction or maybe it's an oscillation between a plus minus 5% kind of a band, and that's what's playing out, Prashant. So we're not totally surprised here. This is about the immediate short term, but on the longer term basis, I think India is one story that cannot be ignored, given the kind of consumption play that India is getting into. I mean, as in the millennials and the Generation Z that is going to rule in the consumption space for India. And obviously the fact that we always have been established on the services export front, but are also looking at a manufacturing base now for the world as such. So this is one thing that cannot be ignored. And that's why we believe that probably for the next couple of months, maybe we'll be digesting this move. But beyond that, I think global events on the side, we are totally well placed to play this out.
Okay, well placed. India is in control, it seems. Dinshaw, good speaking to you today before we get into the weekend. Dinshaw, you know, the last time you joined in, close to around a month or so ago, you said a couple of banks were what you all had got into, and you all had picked up more of IndusInd Bank. That's a good call because I think it worked out pretty well for you all. There was some negative news flow. The stock crashed to around 800 odd. You all topped up out there, so pretty good news. Now, in this week itself, some of these tier 2 banks have come back onto the list. And, you know, some of them are trading at a sharp discount, 0.6, 0.7 times price to book. You know, I think IndusInd Bank itself is trading at around 1.5, 1.6. Or I remember the market giving it a much higher multiple a few years ago. Have you all participated in these other tier 2 banks, you know, RBL Bank, IDFC First Bank? Some of those names that are absolutely ignored, suddenly they saw buying interest?
So, Nigel, in fact, you know, we've, I mean, you took those names. I will not comment on those names per se because we keep considering various banks in our portfolio. But, you know, there's a limit to which we can buy banks. We already have some 6, 7 of them in our portfolio. And frankly, I mean, we've been trying to get some cash raised to, because there are quite a few exciting names there actually. But the point is because it's a PMS, right? So you can't, to buy some, you have to sell some, right? So we're at a loss to get those ideas, even to sell today, to get into these names. So you're right in a way. I think the private banking sector itself is going to be a growth story going forward. In fact, the whole BFSI space for us is looking very good. And frankly, I mean, as I said earlier, consumption is what is going to drive our economy as such, making us probably one of the fastest growing economies in the world in the next couple of years, and for the next couple of years. And that is mainly because of consumption. And obviously the funding of consumption is going to come through either private sector banks or NBFCs, and insurance is going to play a big part here again. So that's why these are the few that we've been looking at, and we've been playing this out thoroughly. In fact, today we are probably a couple of percentage points overweight in the BFSI space as compared to that of the benchmark for us.
You know, Dinshaw, you said you had 5, 6 banks or thereabouts, you know, and a couple of them at least you were kind enough to share with us last time were Axis Bank as well as IndusInd Bank. You know, between this banking exposure that you have, how many of them are those, you know, large cap banks, you know, the tier 1, and how many of them are tier 2? So we get a sense out there, you know, about how you're positioned on the banking space.
So the number of banks that we have, probably a third are the not so large,
okay,
and 2/3 are the large cap ones.
Got it.
In terms of numbers.
Yeah.
These So these smaller banks have enticed you, Dinshaw, at all, or no?
Definitely they have, and that's why I was saying to Prashant that the problem is that we can't find the cash to make way for, because we have a limit of 30-35 stocks in our portfolio, and we are already exceeding that limit by one particular number. So that's how we are.
Anything as this move that we are seeing in defense names, Mazgaon Dock, for example, some 13% higher. How would you venture out away from what you already own? I mean, of course, you may do that when you get more cash. Would you sell anything to buy anything new at this point?
Prashant, so we already are proud of one of the defense names, which is obviously a public sector company, and that also has done fairly well for us. It's one of the largest ones, but you won't find us getting into these other names which are more of, there's a liquidity issue, you can't get your volume, so you won't find us there. But we take our bets accordingly. It's not that we don't have, we obviously, if we are really excited about an idea, we make way for the cash. And that comes via, weighing one stock against the other and saying, will this do better than the other one? And that's how we do go about raising cash. But in the AIF, we don't have any of that kind of a constraint. We can always just reduce weights across and do it. So that's how we go about it.
Okay, all right. What about the chemical space? There are some capacities that are getting shut down globally, but also demand is getting pushed back a little bit. How you view the space? Do you still believe there is plenty of potential? In the past, you mentioned that SRF is a stock that will continue to remain invested in. But are there more opportunities coming up out there, or do you believe now the industry on the whole is getting to a bit of a flux because of the uncertainty?
So, Nigel, we were never too excited about the space. We, in fact, had just one stock from day one. In fact, we just had one stock in that space. And frankly, for the life of us, we couldn't understand why the valuations were so high. Ultimately, these are non-ESG players, and the reason why China was moving out was because of ESG concerns. So we weren't too keen on these. The only one that we picked up, which you named, was mainly because it had a one solid business of packaging, which was a cash cow business, and the other one was another business which was less politically based as such. So that's why we liked that particular name, and that's why we remained in that. But not beyond that. We haven't looked at any other. We won't be looking also at any other chemical company right now in the near future.
Okay, all right, Dinshaw, always good hearing your thoughts. Thanks so much for stopping by. Wishing you a good Friday evening and a rocking weekend ahead as well. Look forward to chatting up with you.
Thank you. Wish you the same.
Rather soon. Well, let's address a couple of names then. KRPL, that's a